What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is April 15th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to take a long-term viewpoint as to where we stand within the cryptocurrency market and try to understand where we could be heading over the coming weeks and months as we go into the later half of 2022. We've got lots of things to dive into today's video. It's going to be an exciting macro video that you guys won't want to miss. All right, so let's go ahead and kick off the analysis here. Now, the first thing I actually wanted to start off here with is, as we're focusing on the macro picture, I don't want to just look at Bitcoin's chart. We do a lot of analysis on Bitcoin, and you guys generally know what we've been calling for here. If we take a look here at the weekly, to put it really simple, we believe that we're going to continue to charter higher up here, get above previous resistance in the past, and make it support and spring up higher towards 150K to 200K sometime towards the later part of 2022. That's the theory we've been talking about here on the channel. But what I want to focus on today is talking about total market cap and the trajectory that we could expect it could take in order to set its new peak for this cycle. So how far do we think this is going to go in the sense of dollar valuation? And on top of that, when could we expect this kind of top in the market? I think it's a very interesting question. We're going to spend some time diving into it here today. So let's go ahead and kick it off here. The first chart here, the total market cap, which is including all cryptocurrency market cap from Bitcoin to altcoins, is laid out like this for at least our projections at the moment, with a top coming in sometime around January or pretty much Q1 of 2023. Now, I want to go ahead and focus on a few key things here. This might look a little bit overwhelming at the start. It might look like there's a little too much over-analysis going on, but I'll actually showcase it's quite simple here. The first thing I want to focus on is the macro bull runs or bull markets here. We can see from bottom to top, which is how we analyze what's technically known as a bull market, and vice versa, the top to the bottom being the bear market, the period you do not want to be caught in the market. We could see here that the overall total market cap from back here in the bottom of 2015 to the peak in 2018 during the last cycle was 36,451%. So far in this cycle, from bottom to top, or at least bottom to where we are now, if I can get the actual metric here, there we go. Technically, from our current peak, we've only done around a 3,166% return. That's from the absolute all-time highs set in November from the bottom. And I think many of you would agree here that this is likely, again, and probably one of the clear signs here that we're not in a bear market, that this would be way too short. All the while, we are going to have declining returns over time. Not only would the cycle be shorter than the previous, which we've never had in the past, but on top of that as well, we'd only have a 3,100% return. So I think we can go ahead and safely assume here, along with the whole range of other data science models, whole range of other metrics that we look at, that again, we are not in a bear market. We're not setting up for a bear market. We would see a much more stark sell-off if we were in a bear market, as well as a better blow-off top where prices are much more parabolic, as we've seen practically every cycle top. Even though the cycle is different for sure, we would have seen these signs much earlier. We just simply aren't. Instead, what we're seeing is generally higher lows over time, right? We see price building up higher ranges of support and consolidation. And I think what we've got here is the opportunity coming into the spring and into the summer to set in not only new all-time highs, but to make this previous range of resistance at $2.5 trillion into new support. And from there on out, to see a 4x multiple in valuation to bring us up towards $10 trillion in January. Now, I know many of you might be thinking this sounds a bit crazy. It sounds like it's a big ask to go from $2.5 trillion all the way to $10 trillion. But I'm going to show you all that we've done this not only here within this cycle many times, and in both cases at a higher degree of percentage returns, but on top of that as well, we've seen this through previous cycles. We've seen much greater returns in the past. So let's go ahead and take a look here. So first off, what we're really asking for here, if we're analyzing this in a kind of consistent way, is that generally speaking, we have these waves here within price, right? Where we either, again, come up towards a relative high here or coming out of a bottom. And we generally within about 6 months see over 300 to 400 or 500% returns. We saw back here from the bottom of the bear market from December 2018 to June of 2019, a 330% return. And within just 6 months, the fastest recovery out of any bear market consolidation lows past that 80% correction point. Right? I think it was the second fastest recovery. So we outpaced two previous ones in the past. Then on top of that as well, we had, once we revisited back up towards those relative highs at around $380 to $400 billion in market cap, we saw crypto market valuations go from that same range all the way up here towards 2.5 trillion, a near 500% return in just 6 months. Now, what we're calling for here is after we revisit back to this previous highs, and you could even technically utilize the slightly higher level here at 3 trillion, but we're just going to go ahead and showcase here again our kind of estimate. Our estimate is that this range at 2.5 trillion is really the resistance here, as it was the previous high here. Once we get above there, we're now trying to chart it towards 10 trillion, which is really only a 291% return in 6 months. So within this cycle, we have seen not only this happen before, we've seen greater returns in this kind of period of time. 6 months is a pretty reasonable ask. When the market starts moving, it starts moving, especially after this long consolidation period that we've been going in, where we've been having the higher lows and higher highs, signifying that people are just waiting for that narrative. They're waiting for that drive and that reason to really start buying the positions that are going to drive market prices higher. And then, of course, after that, I do believe we're going to see a pretty stark correction, probably about 75%, 70%, down to that $2.5, $3 trillion range sometime in 2023 or maybe even later on. This might take a lot longer than we have drawn here, but it's just kind of a key point to signify that this is the top we're estimating here for the market. And we can see here again, all the while, this cycle has been defined by extensive mid-cycle rallies and mid-cycle corrections. If we just take a look here back in the past and grab any given 6 months. I mean, we don't even have to get the most parabolic ones here, right? Where, for example, in 3 months, we did a 526% return. We could even just grab a various set of different months here. So let's just grab here to here, right? Solid returns here within 6 months. And if you just continue to drag it back here, you can start to see within these given time ranges as we move throughout the cycle, it just gets more and more exponential. The difference here between this cycle and previous ones from this one is that there is a whole new wave of leveraging credit in the system. And that's what's led us to having these exacerbated cycles where we short squeeze against the shorts and prices go up, but at the same time, the longs who are overexposed get liquidated on the way down. If you really just take a look over time, and we really kind of drown out the noise, right? What we're really doing here is having a nice linear uptrend with exacerbated rallies, exacerbated corrections. Imagine it kind of like a zigzag against the long-term trend line for Bitcoin and the crypto market. As we go through these periods of time where price just stagnates, we finally break through and have another parabolic rally as people are very doubtful at this kind of period of time. They think the market's just going to keep dragging down. We're going to go back down to the lows. When in reality, we start to slightly charter higher. We have the higher lows and higher highs, and boom, we break out. New paradigm. Market prices rally. We set a new all-time highs. Now, another chart we could look at here is Total 2. Now, Total 2 has to do with analyzing the altcoin market. Now, I think it's important to note here that when it comes to the altcoin market, we need to understand that there are waves where altcoins are in dominance against Bitcoin and periods of time where Bitcoin is going to be outpacing altcoins. When is that going to happen? Well, I think there's a few different opinions that people are sharing here, but generally speaking, if we're going off of the last cycle, which is really where altcoins really started to manifest back in 2016 and 2017, going into the peak here in January 2018, we can see here that altcoins generally set in their peak here at around $500 billion, right? This is excluding Bitcoin's market cap, right? We really saw the peak up here around this range, and that's where altcoins really had their blow off top in the market and really started to see a significant valuation increases and significant increases on their ratios. I think, reasonably speaking, we're going to get back up here towards this $1.7 trillion range, where we peaked at last time, or roughly around 1.5 trillion. And generally speaking, we're going to see anywhere from around a 400 to 300 something % return. Now, this is a little bit higher than the one mid-cycle rally we saw here. And the one key differentiator, though, I think that makes an exception for this, first off, I mean, it doesn't mean that we can't have a higher mid-cycle rally in the previous. We obviously saw here already that we had a much bigger one here of 1,000% within just a matter of 7 or really 6 months, if you really want to simplify. That's when the move actually happened, right? We've already seen that you can have greater ones later in the cycle, but overall, this is pretty moderate and close to what we've had throughout the cycle here. And on a macro perspective, if we clear out these kind of shorter term cycle performances within the market, we can see that overall we're asking for a near 20,563% return from the lows back here in March of 2020 towards our new all-time highs of around $7.5 trillion. Now, that might sound crazy, but in the previous cycle, we saw not a 127,505% return. We saw a 1,270,505% return from the lows. We're asking for 1/60th. Again, correct me if my math is wrong. I apologize. I'm on the spot, guys. But 1/60th of what we previously did in regards to returns. I don't think we're asking for too much to see altcoins go to 7.5 trillion. And that's considering as well that Bitcoin will have probably faded some of its gains. As we see towards the end of the cycle, at least as we saw last time, there's a cyclical rotation of valuation from Bitcoin to altcoins. And this allows people to kind of catch this last parabolic, crazy speculative wave of the crypto market that we have catched in the past. We did a very good job of that back in 2017, going into the entry of 2018, when altcoins were just popping off. And we took profits about 2 days before the overall market had topped out. If you really take a look here at the trend line we have here, again, just cutting out all the noise, you can see that what we're asking for here versus the past is much more conservative, not only in the sense of returns, but also over a longer period of time. And you can just see that the line essentially is just kind of flattening out over time, right? We're expecting that within each cycle, we're going to have lower degrees of returns in regards to the market. It's going to be this kind of layering, kind of process here for valuation, right? Don't take the lines as gospel, but it's just, again, trying to showcase the principle of declining returns in longer cycles each and every time for these bull markets. Now, if you guys are focused on the long term here and in the crypto market, whether you're looking to expose yourself to the next greatest coin here, if you think that altcoins are going to outpace Bitcoin, or if you're looking to just get more exposure into the market, you can always, again, consider using our sponsor for today's video, and that is Celsius Network. Now, Celsius Network allows you to access a whole range of different services. Their yield product is probably one of the biggest ones in regards to the services they offer that you guys might know them for, but you can also use Celsius for a whole range of things. You can also utilize your crypto as collateral in order to take out a crypto-backed loan in order to borrow as little as 1% APR each year. So you're able to go out there, lock up your crypto collateral, and basically take out a loan in this case to be able to go out and either purchase more cryptocurrencies, which I've done in the past. Again, it's important to understand the terms that come with that and how to secure yourself if the market continues to dip. But on top of that as well, you can also borrow it for short-term credit to use for expenses in the short term, so you don't incur a taxable event by having to sell your crypto in order to have some fiat in the short term. And on top of that as well, there's also their new swap feature that has now come out in regards to early access users. So if you guys want to apply to get access to it, you guys can sign up for it. But it allows you to swap from any assets within the Celsius platform with 0 fees. So you can go from major cryptocurrencies like Litecoin to Bitcoin, or your favorite altcoin like Chainlink to USDC. Any combination that you can really think of from Celsius assets, you can get access to. It's a really exciting feature that's launched within the platform, and I love the fact that there's a 0 fee approach already baked in this case, to the app where you're able to earn yield on your assets. So if you guys are interested, check out the link down below in the description. It's a great way to support the channel, and I've been a long-time user of the Celsius platform. So anyways, guys, diving back into this topic here, I did want to spend some time revisiting the Bitcoin chart here, right? Again, we've been talking a lot here about these kind of long-term rallies and within the cycle, long-term consolidation, I would say more short-term periods of rallies in price and long-term consolidation patterns. And I think that we're completing yet again a secondary one here that's going to set the stage here, a new support foundation for us to rip higher and have the third cycle rally. We are expecting that Bitcoin would have in its cycle peak sometime in November of 2022, give or take a month before or after. Right? We want to give ourselves that margin of error. We're not trying to call the absolute period where the market's going to peak. But within that given range, generally Q4 of 2022, that's going to give the liquidity surge in the market for it to trickle down into various altcoins in the market. That's what we're expecting. It's what we saw last time, and it's probably what we're going to see this time. Right? We saw the exact same thing even here during the mid-cycle rally here towards 65K. When we started to get up here into March, there was a whole range of altcoins during this period of time, or really in the later stage of Bitcoin cycle starting back here in December and January, where we started to stagnate the momentum. Right? It's kind of like an S-curve, right? We started to roll over a bit. altcoins were doing great during that time, right? And they benefited from this surge of valuation and liquidity in the crypto market as people rotate their Bitcoin into altcoins and demand starts to shift. So I'm very excited to see what's going to be happening over the coming months, guys. To put it simple, nothing's changing in our thesis here. We've been set on this idea for the longest period of time, back when people were calling for Bitcoin to break 100K last year. When we were going against the grain on that, we didn't believe we'd hit 100K, right? We've been calling for 150K, 200K here into late 2022 at the earliest, the expanding cycle theory. And so far, the framework here has been playing out. It looks like we're set up for it here, right? And I think it's just a matter of time before we start to spring higher here, get back up to new all-time highs, turn this range under support, and then start to break out even higher in price. Now, I don't know exactly if we're going to hit 150K or 200K, but simply put, we are confident that we are still in a bull market, that we are still charting higher, and that it's just a matter of being patient and letting the market do its thing. So, anyways, guys, that's it for today's video. If you enjoyed this video, consider dropping a like, consider subscribing, hitting that bell icon. And if you enjoy this kind of content, you guys can always check out the Dash Report. It's a great way to support the channel. We're actually doing our webinar here today. We're going to be answering a whole range of questions from subscribers to the newsletter and kind of diving into our previous analysis of this past month. But that's it for today's video, everyone. Thank you all so much for watching, and I'll see you all in the next video. Take care, everyone.